Ladies and gentlemen, my name is Greg Michalowski. This is a Forex technical analysis report for November 12, 2014. I'm going to take a look at 5 currencies in 6 minutes. Let's get started. I'm going to start off with the New Zealand versus US dollar. This is an hourly chart. The Reserve Bank of New Zealand's financial stability report came out. And what it said was that amongst other things, that the currency remained overvalued, but the market's not buying it. The market sold off a little bit, came down to the 77.93 level. And I want you to focus here on this level. This was a high right here, and then we broke above the level here, and then we came down through it here, and what we use that 93 level as resistance. The next time we came up to that 93 level, the market found a ceiling here and broke through the ceiling right there, and then fell back through the ceiling into the floor right here down to the 100 and back down trading today. In today's trading on the last move to the upside here, where have we found support? Against that 93 level, so that's going to be our level that we're going to be watching in overnight trading here as we start the new day. As long as we stay above the 93 level, that's going to be more bullish for the New Zealand versus US dollar. If we move below it, look for a rotation back down toward the 38.2, and then we'll watch the 200-hour moving average. I expect to see buyers right here in the New Zealand versus US dollar overnight in that currency pair if we go lower. If we can't get below this 93 level, which by the way, I'd be a little bit more bullish here, looking for a break above the 50%. Risk is defined, risk is limited. Look for a break of the 50%. Look for further squeeze above the 78, 39 level. Let's call it 40 level, and then move up toward the 78.55 level. We'll see if this level holds. I think that 93 level is important. Let's look at the euro versus US dollar. This is on an hourly chart. And what do we see here? We see a bunch of resistance here, or a cluster of technical levels. A trend line here, the 200-hour moving average. And then we have the 125 level as well. Remember the 125 level from early October? That was the October 3rd low. That was this level right here. And if we go back to our hourly chart, right here, the market did find sellers against that 124.99 level and move back below this cluster of resistance right here. And that's where we stand. So as long as the price can remain below the 124.99 level, let's keep the pressure on the euro versus US dollar. If we were able to get back above the 200-hour moving average, look for a break of the 125 level, moving up to the 38.2, 50% retracement would be our next targets on the top side for the euro versus US dollar. That's of this move to the downside. Let's take a look at the sterling versus US dollar. Unlike the euro, we went a little bit above the 200-hour moving average in afternoon squeeze to the upside. We also went above the 38.2% retracement above this trend line as well. So it too had a cluster, maybe a little bit more spread out than the euros, but a cluster of resistance that we were able to break above, but giving back some of those gains here as we test the back to the underside of the trend line. We'll see if there's some support buyers, but we do need to get above this area right here, get above the 200-hour moving average. We haven't been above the 200-hour moving average since it really plunged on this day right here. This is, I guess, the FOMC trading day, where the FOMC was more hawkish, and so we haven't been above that 200-hour moving average. Tried it today, couldn't close above it. Need to close above that 200-hour moving average in order to push this market to the upside for the sterling versus US dollar. I want to remind everybody about the 160 level, 160.20 level. What are the significance of those levels? If we do move higher, the 160 level is a 50% retracement of the move up from the 2013 low to the 2014 high. The 160.20 level is the 200-week moving average. That's the green line in this chart. Let's take a look at the dollar versus yen. Again, on the hourly chart, this currency pair had a move to the upside here in Asian session. There was some reports that the sales tax increase, which is scheduled to go into effect later on in the year, will not take place. And that helped to move the Nikkei higher, and also the dollar yen and all the yen crosses for that matter to the upside. We broke back above trend line here. We based first off against a 100-hour moving average, and that was bullish. That gave the buyers a reason to buy. We moved above the high levels. These are the highest levels going back to, I think, 2007. This is our weekly chart. Go back to, yes, 2007. So a long time that the price hasn't been above these levels, and we go and make new highs, 7-year highs, I guess, for this currency pair. Only have the market rotate to the downside. The good news is that we held the 38.2 to 50% retracement of this move to the upside, and also held above the 100-hour moving average. Let's just keep this 100-hour moving average as a key level on the downside. As long as we stay above it, it's more bullish. If we move below it, that would be more bearish for that currency pair. Let's take a look at the Aussie versus US dollar. This currency pair is at a crossroad as well. We moved above its 200-hour moving average, above its 38.2, and above its high ceiling that we saw in trading in yesterday's trading. The inability or the ability to move above that level is bullish, but we could not, or we're not sustaining the rally to the upside, finding support here against that 38.2% retracement though. And as long as the price can, and the 200-hour moving average, as long as the price can remain above this area, it's going to be bullish for the Aussie versus US dollar. If it moves below, we're going to look a little bit more bearish on the failure of the break to the upside. So there you have it, 5 currencies in about 5 minutes and 30 seconds. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.